Hi, welcome to this podcast where I'm going to look at the final sections of the IAS 7 cash flow layout. Okay, so we've already done the operating activities in a previous video. We've also now covered the investing activities, and finally we need to look at the cash flow from the financing activities, and then just this little adjustment down here at the bottom where we prove that what we think is a net increase in cash and cash equivalents from the three sections is the same as the overall increase or decrease in cash and cash equivalents that we've actually got on the income statement in the cash and bank section. Sorry, in the statement of financial position on the cash and bank section. Okay, what we're looking at in this section are mainly three types of inflows. We've got the issue of shares, which would be an inflow. We don't include bonus issues there because with bonus issues, we're just moving capital from one type of equity account to another type of equity account. So a bonus issue wouldn't be a cash flow. Any new loans or mortgages the business has taken on during the course of the year, and if they've issued any debentures. And then for the outflows, we're looking there at redemption of shares, repayments, not any interest on loans. So interest on loans, the format that the exam board I use includes any interest paid on loans as part of the operating section. You do see sometimes in final accounts the interest included in the financing section, but for students I teach, try and make sure you just keep it up there in the operating section. Any repayments of debentures, again, not including any interest, and any dividends paid. What you're likely to get in an examination question is a statement of financial position. I've taken some extracts out here for the bits I want to talk about in this video. We've got 2019, obviously 2020 are the two sets of information. We'll come on to the cash and bank bit at the end. Okay, but the ordinary shares, now here we need to be careful. The ordinary shares have increased, so you would think that there's been some proceeds from the sale of shares. We also see here that the share premium has increased. So we'd need to add both these changes together when we put in the proceeds of the share issue. So there's a 200 increase in the ordinary shares, a 50 increase in the share premium. So the proceeds from the share issue in total are 250. Okay, we've now got the debenture, and if we look on here, the debenture has decreased by 200, so that's going to be a repayment of a debenture, and that would go in as a minus cash flow because money will have left the business. And finally on the mortgage has increased by 400, so we've got a receipt from the mortgage, a cash inflow of 400. Notice the retained earnings. I've done nothing with the retained earnings because the retained earnings are included in that initial adjustments are in the operating section. Okay, and then we've got the two dividends. Notice it's a final dividend linked to 2019. Final dividends are paid after the year end, so they won't appear in the current year's cash flow statement. They will always appear in the following year's cash flow statement. And for us, the final dividend for 2019 was 100. So that will be a cash outflow because that money has gone to the shareholders, obviously. And we've got the interim dividend that was paid. So the total cash outflow linked to the dividends is 150. So overall, the net cash flow from the financing activities is a positive 300. And that will be added on to the net cash flow from the operating activities and the net cash flow from the investing activities to give an overall net increase in cash and cash equivalents. And in this case, it's 600. And then underneath that, we do a little check. And that check is that the overall change in the cash and cash equivalents is the same as what our cash flow statement is saying. So at the start of the year, we had plus 200. At the end of the year, we've got plus 800 in basically as cash and in the bank. and therefore the change here is 600. The change that the cash flow statement says we should have is 600, and therefore we can be confident that the cash flow statement is reconciled. Right, for those students I teach, I've given you a few questions to do, which will be shared with you. Obviously, email me if you've got any problems with what's being discussed in there. And good luck, and I hope you followed it. And obviously, if I teach you, let me know if you didn't. Thank you very much. Goodbye.